Hey, so here we are. So, uh, just today we were doing a similar webinar, and we were talking about intraday and swing trading in Forex. And we analyzed some nice pairs, okay? And remember, I mean, some of you probably were here yesterday. So if I go here to, let's go to the Kiwi dollar. So the Kiwi versus the Japanese yen. Yesterday we were talking about, we were here, okay, and this candlestick, and we were saying that we were expecting this on the Kiwi yen. So this is a quick update. The weekly demand level is playing out really well. So hopefully you took advantage of this trade because it really played out. So now we're waiting for price to drop here to buy again for those who missed it. Okay. So a great trade. Okay, Alessandro, nice. So good. So this is what we have here. But this is not, um, sorry, this is not a webinar about Forex. That was yesterday. Today we are going to analyze something completely different. We're going to analyze stocks, okay? And we're going to see the difference. Oh, obviously, you know the difference between intraday swing and scalping and long term in stocks. But here, well, many traders, well, most traders have no time to trade, obviously, because they have a full-time job, family, children, etc. So having a job is like a problem to them because they want to make money every day, like doubling their account overnight. You know, that's intraday and short term. We're not talking about that here. Okay, we're going to see the difference between the two, and but here this is a more long-term approach. Okay, so I'm going to start. I'm going to accept suggestions from you. Okay. Um, Okay, hi, FLUT. Okay, I'm going to just type some of the stocks, okay, and I will try to analyze them. So I want to do a couple of them at the beginning, okay, because they are, I believe they are important, and then I'm going to accept just the suggestions like Nitin's FLUT, okay, and so this is BLK, okay, BlackRock. And I hope you know who these guys are because these guys are, I mean, they are managing the world, let's say. Okay. So this company here, it was founded in the last, well, many years ago. So, and these guys are managing funds. I mean, like the last time I read about them was like 9 to 10 trillion dollars in assets under management by this company, by BlackRock. So these guys move the world, okay? So it's like roughly 10% of global finance assets. So what we have here is, okay, this level of demand on the monthly in control at around $949, and it's already above $1,000. So maybe this rings a bell to you because if we analyze this picture, okay, and compare it with other American stocks, like for example, right now, Meta, we are going to see this. What This is a very similar imbalance. So look at this. 1, 2, 3 large candlesticks. On the monthly time frame, we go back to BlackRock, and we have 1, 2, 3, 4 retraces, and now it's trying to rally. Microsoft just penetrated the level even deeper, and now this one didn't. So what happens here? This is, I mean, this is long-term swing stock trading, okay? And this company, like I said before, these companies really big. I mean, BlackRock they manage ETFs through these ETF indexes from iShares. They run well institutions portfolios. They provide risk management systems. These guys are okay. Their clients are not retailers like you and me. They are governments, central banks, pension funds, insurance companies, etc., etc., etc. Okay, so these guys move a lot, move the world. Okay, so that doesn't mean that this level of demand is going to play out. But when we start looking at the smaller time frame, let's go to the smaller time frame for short-term intraday. Okay, when we go to the 4-hour time frame, for example, okay, this is what we have. The demand level is reached back in the 9th of March 2026 when the market opens, okay, right? And then price rallies and prints a new high on the 4-hour. And look at the strength of this movement. 1, 2, 3 candlesticks. And from here to there, there is no room, price action. This is a void. So it's very easy, or it should be easy for price to keep on rallying higher if these highs here are broken. Hello, Roger, welcome. So this is what happens here. So what happens? Price drops again. And if you can see price action wise, for it's dropping slowly, nothing to do with these 3 candlesticks on the 4-hour. Do you follow me? Then price rallies again, okay? And we even have a bullish gap the 17th of March 2026 without closing underneath. Then price rallies, new high, drops to the same area, and this one is a demand level on the 4-hour. This one is not. Then tested the level, rallies, look at the largest. This is the largest candlestick on the 4-hour in days. If you compare this candlestick here on BlackRock, okay, has nothing to do. It's like these 2 candlesticks together. Then yesterday, it does nothing for 4 or 5 candlesticks during the New York session, and then BlackRock gaps up today. So why does BlackRock gaps up today? Okay, because we do have the monthly demand level in control. So that 4-hour happens right there at this lower wick. So the stock is bullish, and we can see in the smaller time frame for short-term new imbalances. So here we have a new imbalance on the 4-hour. So if you missed or you did not trust this stock in particular for whatever reason, maybe because you are following the news and what Trump is saying and not saying, okay, then obviously you are not going to take a trade. But here, this bullish gap today, a gap of about 4-5%. So now we need to wait if you didn't take the trade, a long-term swing position. So this is short-term. If we go to the 1-hour time frame, which is even shorter term, we can see the strength of this gap over here of about 4.5%. And we compare candlesticks, we zoom out. Remember the 4-hour demand, 4-hour candlestick we talked before? Look at these 2 candlesticks here on the 1-hour. Those 2. Aren't those 2 candlesticks here the largest candlesticks in days? And where are they happening? Because location in trading is very important. It is happening as a reaction to all these blue levels are the monthly and the 4-hour area of demand. Okay, so they are reacting from here. It paused a little bit during yesterday and before yesterday's session, New York session, and then the stock rallies and gaps up 4.5%. Okay, this is what happens in the smaller time frames. So obviously you want to buy this particular stock, okay, BlackRock. The next spot is down here, okay? Not now. I mean, after a strong rally of about 5% on BlackRock stock and a bullish gap, gaps tend to be filled. So buying right now, expecting this to happen is not a good idea because, okay, you are saying, okay, I'm assuming this is going to happen. I'm going to go short. No way. Just wait here. And then from here, you try again. If you are not long, not yet, then you can buy or you add new positions to your existing positions. Okay, so all this is happening in the smaller time frames because the bigger time frame demand level is in control, monthly is in an uptrend, etc., etc. So everything is saying up, up, going north. So Alessandro is asking about UAA under Armour, I think. UAA and analysis, if possible, to discuss the fear to take a trade. Okay, no problem. I believe that you will have no fear if you drink some Prosecco, amigo mio. A lot of Prosecco. So, good. So this is what happens. This is what happens. He's from Italy, so Prosecco is like the Italian wine over there. There are better wines, obviously, in Italy, but Prosecco is like the wine in the world, Italian wine. Okay, they just added some bubbles to the white wine, and then Prosecco magic. Okay, and they are charging so much money for that. A white wine with bubbles. Okay, good. Nice. So now you can see, I mean, this company, like I said, BlackRock, I mean, this is the difference between, okay, you are like, you are a family man, okay? You've got children, a wife, a job, full-time job, etc. And then you just can't, okay? Uh, Look at the smaller time frames on the 1 hour, 4 hour, and etc. So to take a trade, because probably if you are in the US right now, okay, at this time it's in New York, I think it's like 2 p.m. or something like that. So at 2 p.m. maybe you are in your lunch break. Maybe you can have some time to trade, but if you don't have a break at this time, or you are in the East Coast, West Coast instead of the East Coast, then you won't be able to trade. So what is the solution for this? It's like, well, you better trade swing, okay? Because you've got a life, and since you've got a life, you need to find time, or you don't need to stay in front of your trading platform all day long. So this is why trading supply and demand and the bigger time frames make sense, not only because of that, but also because it is the bigger picture that tells us where the institutions are doing or where they are planning to trade, because traders obsess over intraday. The retail, let's say, narrative is like BlackRock is manipulating everything. The reality is that markets move because of supply and demand imbalances, liquidity shifts, and institution positioning. Okay, there are many players, not just one. So, and these guys don't focus on the smaller time frame, the 1 hour and 50 minutes. They don't do that. Okay, they don't do that. They manage other people's money, and this company is obviously powerful, and well, they're very interested in this one. But these guys are not looking at the smaller time frames. Okay, they're looking at the bigger time frames. They create these imbalances. So Book of Enoch, okay, on YouTube. Hello, Alfonso. I've learned a lot from your free materials. God bless you. God bless you too, my friend. Where are you from? So this is what happens when a bigger time frame imbalance takes control. So you can use these to take short-term intraday scalping, even options trading, bullish options stock strategies, obviously, because we have demand in control and we're expecting this. You can also sell premium to collect premium, hold it for a couple of weeks or something, or you have to select the right strike price, etc. That's explained in the options course too, and you can have access to free material on the internet too to know what an option is. But bullish, okay, bullish. So this is BlackRock, and what is happening in the smaller time frames, okay? The monthly demand is big, usually big, and it is not strong. It is the strongest demand level in years. 1, 2, 3, 4 candlesticks. There is nothing like this in years or ever. So you said that it's not strong, most mutlak, but it is the strongest one in ages. Okay, price action wise, the strongest one. Good. So after this one, let me just discuss a very important asset, okay, that is related to 100 stocks, and everybody's talking about it. I mean, we did a webinar, a specialized focus on this one, which is Brent oil, Brent crude oil, and light crude oil. So what were we talking about? Let me do a summary here. Okay, let me summarize this. You are from Tanzania, Africa, land of Serengeti. Yeah, Kilimanjaro. You are welcome. Thanks a lot. Nice area. Okay, good. What happens here? So this is what happens. Remember what I said. This supply level here was created as a reaction to the beginning of the Ukrainian war. Okay? Ukraine in 2022, February, was invaded, attacked by Russia. So what happens? Everybody was thinking that oil prices, everybody not thinking, assuming and saying that oil prices were going to go to heaven infinity and beyond. And what happened? It dropped 52%, 57%. And the oil prices or the gasoline, when you go to the petrol stations, was like higher and higher and higher. It was going to to heaven, to the moon and beyond, like Artemis 2. So mission. So what happens? Now here, remember what we're talking about here, prior to the Iranian war initiated by Israel and the US, okay, this demand level on the 12 months was in control and we were expecting price to rally, and it did, not because of the war, but because of the demand level was in control. So what happened now? That this monthly supply level was to control and we are expecting price to drop down there. So Brent crude oil is ranging between two imbalances created during two different wars, or the two largest wars, or the most sounded wars, because there are other wars in the world, okay, right now. Ukraine versus Russia, Israel and the US against Iran and whoever is behind, okay? So this is it. It's ranging there. So we were talking that we were expecting price to drop heavily because of that. And there is not only one video, but several videos talking about this. And it is right now happening. So what happened today? Today, what happened is that Brent crude oil dropped like 18%, 15, 18%. Okay. Why? Because we have the monthly supply level created during the Ukrainian war now in control, and we're expecting price to drop very heavily. So is it because the Strait of Hormuz is going to be open? I don't know, because I'm not following the news anymore. Okay, is it because Trump said something that he's going to negotiate something, or he's retiring or falling back? No idea. But I do know, without anyone's analysis, okay, all these so-called experts, that price is going to drop, as we have been discussing for many, many days. So now you can see bearish price action here in the daily. Look at this, red, red, printing new low, and it's heading south. Still more. I mean, like 71, 61 at least. Okay, so I recorded a video today on YouTube and uploaded it like a couple of hours ago. But I just wanted to discuss this because, like the Kiwi yen we were discussing yesterday, they are playing out as expected because there are very large time frames in control. So that's what we are expecting. So if price rallies into this area, there is like a 4-hour area of supply here. So it could rally over there and then from there drop again. Okay, because these bearish gaps are usually filled. So this is what we have on Brent. So obviously, what do you think? I mean, I would love some of you to answer. Okay, what do you think is going to happen now to hundreds of or dozens of American or world wide oil and gas stocks? What do you think is going to happen? Because if Brent is dropping, what do you think is going to happen to those stocks? They are going to keep on rallying, or they're going to keep on, yeah, they're going to be dumped. Okay, so if we take a look, I don't know, the first one that comes to my mind, one of the biggest ones, Chevron Corporation. This is oil and gas stocks. So what happens? Look at the monthly time frame. Okay, so what do we have here? 1, 2, 3 candlesticks. Okay, very strong imbalance on the monthly. We are expecting Chevron to drop down there. So after a very strong rally, we don't do breakout stock strategies. We don't do intraday long in stocks. Why? Because we are expecting this. Okay, I'm going to, Aramco. This is the #1 oil company, I believe. 2222. Yes. Probably now it's dropping a little bit. So I'm going to analyze Aramco. Okay. So, but this webinar is all about intraday versus short term. So if you are a very aggressive type of trader, okay, let me explain what you could do. Okay, remember these webinars are, I'm not telling you where to buy everything. It's up to you. This is for educational purposes and to show and demonstrate how supply and demand works. Okay, you need to know what you're doing. Trading is risky. So what happens here is that if you're doing short term and you know that Brent is dropping heavily because of the monthly supply level that was created during the war of the beginning of the war in Ukraine, we are not selling because, or we shouldn't be selling because this was created in the war. No, I mean, this is the previous war, new war, dropping. It is because of very strong imbalance, and after a very strong rally, we don't buy. And we got a very strong rally, a super huge obstacle in the form of a strong supply level, and now we wait for price action to tell us that this is going to drop, and it is exactly what's happening. So when we take a look at Chevron, you could say, since Brent is dropping heavily, so why don't I go to Chevron and use the smaller time frames, okay, like the 4 hour and the 1 hour, to go short on the way down. Short term, we're talking about intraday, swing positioning, okay, swing trading in stocks. In this particular stock, Chevron, means that we need to wait for for price to drop here to the monthly demand level. But on the way down, you could say, okay, I could start shorting on the way down using bearish option strategies to trade on the way down, because we're expecting that, okay? This is Chevron, one of the biggest one. BP, okay? British Petroleum, okay? What do you think is going to happen now? It's going to start dropping, okay? BP is going to start dropping because of that. So there is a nice level of demand here in the weekly, around $39 per share. So this is what could happen. So swing trading, long-term trading, stock trading, means that we need to wait there, because we don't buy after a strong rally. We need to wait there. So intraday is completely different. So if price drops down there, then you can say, okay, now intraday, long-term, swing trading, that's great. Or you can even use an intraday setup entry and convert it into swing long-term, because the level says so, okay? So I'm going to analyze, since we're doing Brent, I'm going to analyze the Saudi Arabian oil, which is called Aramco. Ali from the Zoom session asked me to do it. So let's take a look and see what happens here. So what do we have here? This is the weekly time frame, which is the one that was being displayed on British Petroleum and Chevron. So what happens here? I mean, by just looking at these candlesticks, okay, can anybody tell me what you think is going to happen next? This is a weekly time frame. Every single candlestick for Aramco, oil, Saudi Arabian oil company, okay, represents 1 week of time. Okay, so what do you think is going to happen? Remember, Brent is dropping. Okay, Brent is dropping. This is not an imbalance. The imbalance is down here. We can see that in only 3 days of time, today is Wednesday, the 8th of April 2026, we already have a candlestick that is larger than a 5 days candlestick from previous week. So what do you think is going to happen? This is like a very easy question. Anyone over there? Ali, you ask about Aramco, or Roger, or Michelle, Diego, anyone? This is what is going to happen, a correction. That's almost for sure. Obviously, I cannot guarantee anything, nobody can do it, but this is what's, I mean, if you are like this basic correlation between Brent with supply level in control dropping, today drop 15% or 17%. That means that oil companies are going to suffer and price is going to drop. We already have a bearish candle being formed larger than the previous week candlestick. So price action wise, short term intraday, you could use shorter term strategies to go lower, or say, okay, I ignore this one and I wait for price to drop on there, and then I start trading intraday short term as a reaction. Okay, that's the two options. I would prefer which one? The imbalance. It reaches the area, we've got an uptrend on the weekly, I should take trades there and not on the way down, because this could reverse. All that I said is like our conjectures, okay, based on the fact that the monthly supply level is in control on Brent and also on crude oil futures and WTI, okay? So we've got also this one here on light crude oil, so price is dropping. So based on that, since we are expecting price to drop on light crude oil, WTI, and Brent crude oil, then we can go short in smaller time frames, short-term trading in stocks related to the oil and gas industry. Okay, that's the, let's say, basic fundamental analysis correlation that we could use without being like experts on fundamental analysis, which I am not. I am not even a novice. I'm not interested. But this like sort of makes sense to me, at least. Okay, so this is the one. So somebody asked me to analyze FLUT or something like that. Yeah, it was a FLUT and then under Armour. Okay, FLUT. Okay, so let's take a look at FLUT. Flutter Entertainment. This company is doing what? Well, it looks like right now, by just looking at the monthly time frame, this is what looks like it's going to happen. Because after, I mean, this is the first time I look at this stock for some time, I believe. At least I don't remember the name, but this is on the website, of course, but there are hundreds. So after a very strong rally, so this is price action analysis, technical analysis on stocks, okay? And this particular one, which is Flutter, FLUT, trading in the New York Stock Exchange. So after a very strong sell-off on the monthly time frame, which is going to be stronger on the weekly time frame, we are expecting this. But that doesn't mean that we should buy, because this is a single time frame analysis. I am looking at this company, FLUT, okay, Flutter, and I only have one time frame. The month is trending down, obviously, selling, if we take into consideration only the monthly. So, but we are going to have to take a look at the bigger time frames, okay? So the bigger time frame says this. We have the 12 months area of demand in control. And the last time, and when that demand level took control, like when? On January 2022, okay, 4 years ago, 4 years and a couple of months, look at the reaction. Price will rally like about, how long? 71%. So now price has reached that area of demand again. So obviously, are you going to sell into this? No way, my friend. No way. No way. Buyer. We buy. So what happens here is this. Now, when we take a look at the smaller time frames, let me take a look at daily here. Then if we take a look at the smaller time, and the monthly is a smaller time frame, if compared with the 12 months, obviously, and with 3 months is smaller. We're not talking, I mean, maybe you haven't ever analyzed the monthly time frame. So for you, it's like, what? I mean, the dailies for me is like big. The monthly, how can the monthly time frame be small? Yeah, it all depends on who or with what you compare that time frame. I mean, it depends on the reference, on the framework. Okay, so what happens? So after a very strong sell-off, on the way down, this is super overextended. Okay, so there is no obstacle here on the weekly, no obstacle on the monthly. So what happens? We find or bump into an obstacle, a very huge obstacle that played out and allowed the underlying asset, Flutter Entertainment PLC, stock to rally long term. Okay, so now we can start using smaller time frames to trade on the way up to the monthly supply level from where we expect a very decent reaction to. So for now, we have long bias on the smaller time frames and short bias when this supply level takes control. Obviously, if you take a long position right now, here, if it gets very close to this supply level, which would be a swing trading position, get out. Obviously, get out. Why? Because it's going to react. And if it doesn't react, it's going to be very rare. Okay, because this is like the monthly time frame. This is the strongest imbalance and impulse ever. There is not a single candlestick. There is not a place on this particular stock where we have two large ERC candles, extended range candles like this. There's nothing like this, okay? All this is a history for this stock. So this is the strongest one. So it's like textbook shorts. But on the way up, we can trade along with the support or the bigger time frames on the 12, on the 3. So right now, there's no signs of anything, any bullishness, okay? But if this high on the weekly time frame is broken, then there is room for price to rally 79%. Okay, so the profit for margin or the profit potential of this particular stock is huge if this candlestick here is out of the way on the weekly time frame. Okay, so okay, knitting. Okay, I answered already. Of okay, no problem. So this is an important one. Okay, this is an interesting stock because I'm gonna just set an alert here, alert on FLUT. Okay, and I'm going to do this. This guy changed this, and I'm gonna act like weekly highs broken with 12-month demand in control. Apply. Okay, create. So it'd be higher like this. If that happens, I'm going to update it on the website, blah, blah, blah. And hopefully it will continue to rally based on the facts that I explain, price action wise, imbalances in control, etc. So you can start trading intraday short term on the way up. And there's a lot of margin for profit on this particular one. Okay. So next one, somebody said or mentioned another stock, UAA, Under Armour, I believe. Okay, Under Armour. And I believe it was Alessandro, maybe, who talked about this one. Okay, Alessandro. Yep. Okay, Alessandro. So what happens here? Well, this is Under Armour. This is an important company, an apparel store. These guys are manufacturing nice things. I mean, here in Spain, well, people believe in this company, okay, in this brand. I don't like it, but it is very famous, obviously in the US even more. So what happens here is this. So we've got these companies got 2.5 billion market capitalization. It had a lot more because one, it has dropped how much? I mean, 82%, almost 100%. But look at this, very strong rally. So when price was up there, it is going to drop. Obviously, you don't trade after this. So now that this demand level took control, this is long-term trading, okay? Very long-term. This is not swing stocks trading. This is not intraday stocks trading. This is not scalping. This is very long-term buy and hold trading. Because the thing is this, if we believe in the company, I believe the company is a good one. Obviously, I don't think this one is going to disappear. This demand level is also at $4 per share. Right now it's at $6 per share. So what happens? You could say this is a strong imbalance. Okay, no problem. If I want to buy 100 shares of this particular company Under Armour EAA, you just spend $600 and you own 100 shares of this stock. Anybody interested in that? You have 600 shares, $600, or even less because you can buy fractional shares with many of the brokers like Interactive Brokers, probably Thinkorswim, Schwab, etc. So what happens? From here, 600. So when this is, if price rallies to this obstacle over there, to $18 per share in Under Armour, 18.6 times 3, you have tripled your investment. How long is it going to take? A long time, obviously, because this is a yearly chart. So what you can do is like, okay, this is like a long-term investment. You do that. You buy 100 shares, 1,000 shares, whatever you can allow. And then as price starts to rally and give you more imbalances, then you can add more positions. That's one way to do it. So what happens? If we take a look at the smaller time frames, and like I said before, the monthly is a smaller time frame if compared with a larger time frame than the monthly. Okay, so price action wise and supply demand analysis. Okay, we've got a strong demand level right there, sitting at about 400 and almost let's say $5, like $1 underneath, $1 cheaper. Okay, so imagine this scenario that when this demand level was reached in the 12 months, you decide to buy. Why? Because it was only $4 per share. You would have spent $400 per 100 shares for this particular stock. This is long-term stock trading. Okay, so now, okay, imagine that you have money and say, okay, I'm going to invest, since this is for $4,000. Okay, so it means that I bought quite some shares. Okay, so 1,000 yeah, 100 shares, 1,000 shares. That's like $4,000. You can buy options too, which is even cheaper. Okay, but time is against you. The thing is this: you buy here. Imagine you have the money. You spend $4,000 and now you hold it long term. So it doesn't matter if price continues to drop and goes to one, it's not going, this stock, if we take for granted that this particular stock under Armour is not going to disappear, it's not going to be acquired or delisted for not following the regulations from the New York Stock Exchange, okay, then if we take that for granted, that's not going to happen, then you hold it. What happens? Now, you bought here a 4, more or less. Price rallies about, how much did it rally? Approximately like 81%. Okay, you doubled your investment already. So you don't care. This is a buy and hold position. You buy and hold the position. So what happens? When price drops down there, then you can say, okay, I have more money. I still believe in the position. I'm going to add more. You already own 1,000 shares. That costs you 4,000. I mean, it was bought down there. Okay. So you add again. You miss the entry. Then now it's the time to buy. So after a strong rally and we have bearish price action, okay, it is not allowed to buy. Okay, we are waiting for this to happen. So when price drops down there, you can add you can buy shares, you can use option strategies to buy this particular stock, or you can start trading intraday using short-term intraday strategies, smaller time frames to scalp. But this is a long-term swing trading position, also based on the fact that we have the 12 months area of demand in control. So we're expecting price to do this, okay, and reach this area of supply right there. This one played out really well. We talked about this one quite a long time ago, and now this price action is really poor. If the 12 months area of demand starts to play out, this is going to happen very easily. So when it gets to about $20 per share, get out. If you bought at 4 to 20, that is 5 times the risk. Reward 5, risk 1. So that's a very long term trade, okay? To buy and hold. This is to buy and hold. But on the way up, we're going to see new setups like we can see now on the weekly, and probably we're going to see on the daily. But buying right now, oh, you might say, oh wow, nice. Now the daily printed a new high. There's a bullish gap on today's market open. I'm going to buy. No, the daily is not trending up. The daily is not trending, neither trending up or down. Okay, the daily is just trying to drop down there. This is just nothing. Okay, there's no imbalance there, nothing. So we want price to drop down there. So Alessandro talked about the fear. No, wasn't you who said that? Fear of trading or fear of taking a trade. Didn't you say that? So why would you personally fear of be afraid of taking this particular trade? Because everything says that we should be buying this stock. Okay. So fear of trading just because of the price action of 3 months and 6 months. Well, I don't agree with you. Why? If we take a look at the 3 months price action, okay, We even have a new high. So why do you fear, Alessandro? We even have a new high. So, I mean, low, 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 suddenly a new high. Why? Because the 12 months area of demand to control. So there's nothing to fear. I mean, if you want to find an excuse, if you want to find something against your position, you are going to definitely find it. Okay, always you're going to find an excuse, an obstacle, something to be afraid about. Always, always. But if we have the 12 months demand level in control, we have a brand new level of demand. I mean, if we take a look at the monthly, this is the largest movement in a year or two. So, and it's happening right at the reaction of the 12 months area demand. So I wouldn't fear about the trade. I mean, obviously, if you fear about this one, which looks like a textbook setup for long-term stock trading, then it cannot be clearer than this. So you're going to fear about everything. Okay. So that's my humble opinion. Okay. So this is under Armour. Nitin, what are my thoughts? That price was 51 time and now it's at 10% its highest. At 51 time, what do you mean? 50 here. There. What is my opinion about that? I mean, what should I say about this? I mean, what are you, I'm not sure I understand. What are you expecting me to say? Nitin? It's now $4. I mean, this is very important. This is supply and demand in real life. Forget about the charts now, okay? Forget about the charts. Let me do this. I don't even know how to do this, but let me do this. Okay, I'm going to switch to the website. Okay, so you cannot see any chart. Okay, so let me ask you something. I'm going to be very, very clear. I use this example a lot, so I'm going to change the good and the thing that you're going to buy. So imagine that you love. I mean, I'm going to use the wine analogy. I love wine. Alessandro here from Italy, I'm sure he loves Prosecco and many other wines. By the way, Spanish and French wines and Italian wines are the best wines in the world. Okay, that's free advertising. So what happens here? Imagine you like wine. You have, again, we're going to use the male-female analogy, the flirting analogy. Imagine you just met a wonderful woman or a wonderful man a few days ago. You have had a few dates and you have a romantic dinner at home, and you want to prepare a nice dinner for that lady that you just met or that gentleman that you just met. Okay? And usually you go to the supermarket. Okay? Let me use a supermarket photography with wine shelves. Okay, so probably Google is going to show me some of these images. Okay, you go to the supermarket, okay? And you usually buy, I don't know, whatever. Imagine a Prosecco. Prosecco, everybody knows Prosecco, okay? A Prosecco wine. And you go to the supermarket and you say, okay, I love this nice Prosecco. I usually buy this bottle of Prosecco at how much? I usually pay $20. It's a good one, okay? 25, let's say $20. So you go to the shelf there, you are preparing, your oven is really hot with some delicious recipe you are cooking for your lady, okay? It's a romantic dinner. So, and you grab the bottle and run to pay for it. You get to the woman, to the lady, and you're gonna pay, and she says, it's $45. What do you do? In this case, as a man, is very simple. Okay, I'm gonna be funny here. I'm not gonna be rude. Okay, as a man, what happens? You have a romantic dinner. You have a date with a woman at home. You're cooking. You are not gonna say, "I'm not gonna buy the wine." Okay, you are going to buy the wine, wouldn't you? All men here. I believe we are all men. All men here. And Galan is sorry. See, you are. There's a lady here, but this is like funny thing, okay? Funny comment. You could do the same thing, okay? So a man thinks that in a very different way, okay? So a man says, okay, I've got a dinner tonight, okay? So I'm gonna buy the wine and I'm gonna have that dinner, delicious dinner, and whatever happens, okay? So it's double the price, double. It's instead of $20, I'm paying $45. I don't care because if I don't do it, then the lady won't be tipsy, whatever. Your imagination can fly. I'm not gonna say anything. Okay? Men think like that. Sorry, Anne, and any other women here. So what happens? But in a normal circumstance, okay, you are at home watching a movie, Netflix, you go to the supermarket, I'm gonna buy a Prosecco. And you go to the supermarket and it is more than double the original price. What do you do, Alexandra? What do you do, Anne? What do you knitting? Ali, Naveen, Ali, probably you don't drink wine, but what do you do? Do you buy the bottle of wine? Of course not. You don't buy the bottle of wine, okay? Unless you are, I don't know, you love drinking, you are alcoholic, okay? I'm not gonna pay double the price, more than double the price, when I'm going to buy the Prosecco bottle, okay? Prosecco bottle, okay? One of these wonderful wines. And as a funny note, we've got this wine here in Spain, which is Italian. It's called like this. So for those who know Spanish, they will know what that means. When you go to the supermarket here in Spain, you see this wine. This is thought for men. I'm not going to say, you just look it up in the dictionary. I don't want to say this word, okay? I don't want to be considered, okay? But this is why these wines are thought for men. So the thing is this. So now is this. What if you go to the cashier, okay? You're going to pay for the wine, and the lady says, okay, your wine is $5. You usually pay 25. What do you do? Anne, Alessandro, Nitin, everyone, what do? You buy one bottle? You buy more bottles? Yeah, you buy 5 bottles. You buy more. Why? My friends, that is supply and demand in real life. And you are experts. You are gods. You are gods as supply and demand traders in real life, you are gods. Number one, all of us. But when it comes to the charts, we become stupid. As simple as that. Stupid. We don't know what is expensive, and we don't know what is cheap. We lost context, we lost everything. Why? Because we are bloody paying attention to the 1 hour time frame. We are paying attention to the 50-minute time frame. We are paying attention to the 5-minute time frame. And these time frames don't say shit about the chart. I'm sorry for being so direct, and because this drives me crazy. I mean, it's so simple, okay? So what happens? So now let's compare or let's try to think as the professional supply and demand trader you are in real life. Okay, because you know very well when a wine is expensive, you know very well when a car or a house or anything you usually buy is expensive or cheap. And you are really good at saying, okay, this is cheap, I'm gonna buy 2, I'm gonna buy 3, I'm gonna buy 5. This is expensive, no. Nobody, I'm not gonna buy this one. Are you crazy? Are you trying to lie to me in my face? No, okay? No. So what happens is that. So what happens? When we look at the charts, okay? Under Armour, a very well-known worldwide apparel company, okay? They manufacture t-shirts, I think they also sports shoes. I mean, think like that, okay? The company, it's launched like back in beginning of 2020, something like that, 2025, 6, 7, okay? And usually for 4 or 5 years, it's about $4 to $5 per share. Then price rallies in 5 years, and the stock rallies like almost 100%. And you look at it. So now the stock is there at $50 per share. And you are telling me that you're gonna buy there? I mean, are you serious? Okay? Are you serious? That I am sure that many companies out there, newsletters, and also like Berzinga and Seeking Alpha, etc., all these analysts are saying, oh, wow, there was like a nice Q1, Q2 quarter releases. They were really good, really good. And then stock dumps 100%. What? I mean, wasn't it the best stock in the world? I am subscribed to Seeking Alpha and all these, I mean, the free ones, the free analysis. I get emails almost every day. And I read sometimes the analysis and I say, oh my God, what are these guys saying? I mean, why? How can people follow these guys? They are saying the opposite. Okay. So here, let's now do this. Let's do this. Okay. Let's go here and let's use this. This is a nine. This is Spanish. This is not Prosecco, but it doesn't really matter. I'm just gonna take and let me see if today it allows me. Okay, nice. I can place the wine here. Wine analogy for everyone. So here, wine was at $4 per share. So you go to the supermarket and usually you buy the wine at five, okay, $4 per share, $4 per bottle, okay, there. Then suddenly this is like bubble wine, wine with bubble, okay, prosecco, whatever, and then the bubbles goes up to the sky, okay, and now you go to the supermarket and it costs you $45, $50 when it was only $5. So how are you even thinking of doing intraday trading right at the top, my friend, when the stock has doubled its price? There's not, I mean, it's just crazy. Okay? And the same happens with Bitcoin. He's saying, yeah, BTC, all-time highs, etc. And then we were saying price is going to drop. Okay? Yeah. So the same thing. So what happens? So now that the Prosecco wine is like very expensive, and the cork, okay, exploded because the bubbles, it was in the sky, so the pressure was a very big poof, exploded, and then it drops. Okay, why? There were no bubbles. The Prosecco wine, I mean, now it's back to where it started. So now you go to the supermarket and the cashier is not going to tell you that you're going to have to pay 10 times its price, because you could buy at $5 and here at $50. Now you go to the supermarket and it tells you, no, 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 you can buy the Prosecco again at $5. Oh my God, I'm going to buy 10. I'm going to buy 100. Okay. It's like that, supply and demand in real life, supply and demand. So no matter how you look at this, you are really, really, really good at supply and demand. But when it comes to the chart, since you are ignoring and you are unaware of context and location and where the bigger picture is telling you, because the big boys, these BlackRocks and the hedge funds and institutions, they do not buy here. They sell. They realize profit and they dump the stock. And now that the stock is at Prosecco cheap price, they buy again. It's very simple. So whoever, I mean, doesn't understand this concept, I don't see what they have in their minds. You know what I mean? This is very simple. So this is a very nice long term. I mean, you don't even need to have this imbalance drawn. Okay, I'm going to wait for the monthly. No, I'm going to wait for price to reach the weekly. I'm going to wait here. I'm going to wait there for 50-minute charts. MACD, cross up, cross down, blah, Bollinger Bands. I'm going to wait for a narrow up. I'm going to buy after I see all that. That's nonsense. You don't need that. You just need, okay, now this Prosecco wine on this particular stock is very, very cheap. Okay, it's at the beginning of time. And the worst thing that can happen is that it goes to zero. It doesn't matter, because you still own the underlying asset. It's like buying Bitcoin or Ethereum cryptos. You buy two Bitcoins. You don't care if Bitcoin rallies or drop, because you own the underlying asset. You own the coins. Okay, now Bitcoin rallied 10%. So now you have 10% more money. It dropped 50%. Now you half your profits, but you still own two Bitcoins. So the same thing. You bought 1,000 shares for $4,000. It doesn't matter. Now it dropped. Now your investment is smaller. It doesn't really matter. Then if this company has like quarterly dividends, you might even take advantage of these dividends. I don't know if these guys are giving dividends or the dividends are high or not, but that would be like another incentive to buy long term. Otherwise, you just wait for new imbalances and new ideas, but only you buy. And this is very simple. I mean, just using this man, women, romantic dinner, and wine analogy, and there are many other analogies I could tell you. It's very simple. The Prosecco wine got very, very high. You go to the supermarket, you don't buy, obviously. You don't. When it gets down there, then you buy. It's like one-on-one textbook in real life. Okay. So this is, yeah. So now short term, longs, intraday, but longs only, but not now. So we have like 3 more minutes, but let's do any other stock. Okay. You want to analyze? Tell me one. Uh, Sporty, I love prosecution. That's another thing, my friend. Unless the Prosecco is directly related with prosecution. I don't want to be prosecuted for drinking Prosecco and do. I know that you wanted to say Prosecco, but I'm just teasing you. I love teasing. Okay. Okay, good. Okay, gold. Somebody saying old gold. Oops. I'm gonna use, yeah, because I've got the analysis here on the Forex one. Okay, gold. Gold is doing as we said, okay, it was happening. Okay, gold. And this is the same thing. I paste the Prosecco. Okay, let's use the Prosecco analogy. Okay, let me do this. Let me do something here. I'm gonna go back a little bit, one sec, to Under Armour. Okay, and I'm going to do this thing. Let me use the replay and hide this price action so I can do this. I'm going to copy. I'm using Snagit to update the community, so I'm going to do this. I'm going to copy this. I'm going to trading view, going back to trading view. Leave. Let me go to gold. Let me move Prosecco here a little bit. Tesla is good now. I mean, monthly demand level in control. Yes. Mohammed. So now let me. Okay, now no problem, Damian. You just arrived. The email said the webinar would start. No, I mean, there were 3 webinars, two, but then the links said one of them was today at 2, was 7. Okay. 7 p.m. Spanish time, Madrid time, Central European time. Okay. So, sorry, but the webinar is being recorded. Thank you for attending, my friend. Okay, good. So, this is what we have now. I mean, is there any smart, intelligent human being on the chart right now that can tell me what's going to happen? Okay. Anyone? Yeah, now I have 2 bottles. This is very simple. This is, okay, this is United UAA, Under Armour. Okay, and we know this happened, and I explained why, and you know why, and you know that what I'm saying is true because you are a human being and I cannot lie to you, and you're a really good supply and demand trader when it comes to okay, bargaining. Okay, and if you are a Muslim from an Arab country and you are from Turkey and these places, you don't give a price without negotiating, without bargaining. Okay, bargaining. It's like that. So as a Muslim in a zouk, okay, in a Medina, you are not going to buy this price, my friend. This is super, super, this is super expensive. The other say, no, 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 that's too expensive, too expensive. No, no, no. And he will insist on you that you buy. No way, my friend. I wanted to buy like one of these shoes made of leather, and then you want to charge me like 150 euros. Are you crazy? I can buy them in Spain for 10 euros, but still tourists pay for that. So the thing is this, is overpriced. This is under Armour, and this is gold. Okay, XAU, spot gold. Let me ask you again, what is going to happen, my friend? Do you need to have three PhDs and 10 university careers and work for JP Morgan or have insider trading information? You don't need to know that. But the problem is that nobody looks at the bigger time frame. They all look at the smaller time frames. So they have no clue as to what's going to happen in the next few months. They have no clue. Okay? So I am giving away all this information. This is here. There are courses for this that explain to you many more details how to trade all this. And some of the attendees now have these courses probably. And if you don't, I would advise you to do them, to take them. Okay, I even become members of the community because I'm explaining this like as it happens. Okay, so and this is very simple. If you rewind this video after it's available on my YouTube live streaming section on my YouTube channel, and you watch this again, you will realize, if you didn't realize yet, that this is the way the world works. And this is not going to change because there is Claude, Anthropic, or artificial intelligence, ChatGPT, Gemini, complex AI robots trading back and forth. It's not going to change. This is how the market works. Okay, markets have limitations because these funds cannot inject huge amounts of capital at once because they move the market. So they do it in chunks, creating these imbalances. And we should be there detecting these footprints of these institutions to buy or sell with the support of these waves, of these new imbalances. And this is it. But if you ignore the bigger time frame because this is where the institutions create the imbalances, okay, if you ignore where they are, and if you ignore that these are like magnets to price regardless of the time frame, if it is short term, intraday, long term, it doesn't matter, okay? If you ignore that, obviously you are missing everything, okay? You are missing the bigger picture, you're missing the location, the structure, multiple time frame analysis, you are missing everything, okay? So, and those who are members of the Set of training community, they know what we're doing here. We have the courses, okay? And this course explains the master and sustainable moves, explain all this, explaining in more detail the options, how to trade this, the intraday, how to take advantage of the demand levels using the smaller times. All this is connected, okay? So the thing is, I mean, just take a look at the bigger time frames and follow me on my channel because I'm talking also about these bigger time frames now a lot, okay? And just remember this analogy, okay, about the Prosecco, or you can use it if you don't drink alcohol, just change it for Coca-Cola, okay? It doesn't really matter. But Coca-Cola is always more or less the same price, so we cannot play with it. You go to the supermarket, more or less it's the same price everywhere, okay? Depending on the economy, you are in Asia or the United States or Europe, it's going to change a little bit. But wine is a very lucrative industry, okay, or sector in the drinking industry. So this is it more or less, okay? I remind you that tomorrow I'm gonna do a similar session, but on cryptocurrencies, okay? Grazie mille, okay, prego, Alessandro. So it's gonna be at it's gonna be at the 3 p.m. Spanish time, Central, and it's gonna be like a 9 a.m. New York time, okay? So and we will be talking about Ethereum, about Bitcoin, about whatever, okay, cryptos. So thanks a lot for attending, and hopefully it will be a little bit more clear, okay, these ideas about supply and demand, the bigger time frames, and why we should be paying attention to them because they are critical. Have a great day.